Grains and oilseeds remain volatile, with politics, weather and shifting supply estimates driving markets move. To look into this and more, I'm joined by Vice President of Execution and Clearing, Bertrand Oesterle. Thank you for joining us, Bertrand. So can you please explain the recent rally in soybean and what might mitigate the recent rise?
So first of all, we've had an announcement from Trump a little while ago saying that he thinks that China will quadruple soybean purchases from US origin. So that came a bit as a surprise. It made the market to rally, and that's despite the fact that US and China haven't yet agreed on a deal. On the contrary, the US pause on tariffs with Chinese products is actually delayed by another 90 days to mid-November. So that was the first element, Trump making that announcement that China will come in to buy 4 times as much soybeans. Then we had a WASDE report late last week that came in as a surprise. We had a shift in planted area in soybean and corn, so a shift from soybean into corn. So that means that the soybean area was reduced to 80.9 million acres from 83.4 previously. So that was the second leg of that soybean rally. Then that soybean rally was comforted by another 2 elements. The first one was the fact that there's been some dryness in the eastern part of the US. So some analysts have said that maybe it will affect yields in those areas. So we'll have to wait and see. And the other bit was the NOPA crush figure that came in for July. That came in for the US soy crush for July as a 195.7 million bushel record for July. So showing very good internal demand in the US. So those 4 elements basically pushed the market up, and it caused the funds, or the specs in general, to reduce their position by about 35.4 thousand lots. They're currently short about minus 81,000 lots in soybean. Now, as you mentioned initially, there are some elements that may mitigate the rise, and those elements that may mitigate are of 2 folds. First of all, the soybean crop conditions in the US remain really good, and they're 68% good to excellent. They're still above the 5-year average of 62%. And more importantly, we have the well-awaited Pro-Farmer crop tour this week. And the crop tour is not looking at yields as such in soybean. It looks at pod counts, which will give an indication of how full the fields are or not, and how much potential yields we may eventually get. And we had, for example, a crop tour record for Nebraska overnight. So it looks like those yields could be very high. So before I went on holiday, we had spoken of the customer survey that we had from out of the US. It was showing a 53.6 bushel per acre estimate. That figure came out from the USDA as well last week on the WASDE, and the crop tour is going to give us an indication at the end of the week whether or not we are close or beyond that 53.6 bushel per acre element in the US.
And are there any other developments in oilseed, in particular with regards to South America or China?
So for South America, we've had one estimate coming out for Argentina. That was from LSEG, and they came in at 50.2 million tons. That's an estimate that's outside of the recent range we've seen, so it's a higher estimate. We had seen 49.5. This one is coming at 50.2. In terms of Brazil, we've seen some estimates from AgRural and from Patria Agronegocios saying that the oil crop is also bigger, and we've had also some new estimates for the new crop, the crop which is not yet in the ground, and the area would be 48.13 million hectares. So it's a bigger, larger new crop area. It's about 1.5% bigger than the previous season. So again, bearish, but people have noted that that pace of increase in the area is actually the smallest in 20 years. So it's going to be an increased area, but not by that much in that sense. In terms of China, we've had some interesting data out of China. First of all, they had a July import figure that was a record, some 11.67 million tons. And their commitment to buy Brazilian soybean is pretty high. So on the back of this, we've heard a lot of noise over the past 2 weeks about China being likely to have less demand for soybean imports. at a time when they continue to test the soybean meal imports from Argentina. They've imported now 4 cargoes as tests. But the thing that is interesting is that China over the past week has put an anti-dumping tariff once again on Canadian canola. It's quite a hefty one. It's 75.8%. And basically that means that no Canadian canola is going to go to China until that issue is resolved. So the Chinese crushers have got 2 options. It's either they look elsewhere, and we've seen the Chinese crusher looking at importing some Australian canola. So there's been a 50,000 ton cargo booked. That's the first one since 2020. And some crushers are saying that if they can't source the canola from Canada, and if they're only restarting the relationship with Australia, they may have to go back to switching to soybeans. So it's going to be an interesting relationship to see if we go back into soybean imports or if the current stocks are sufficient to not foster that demand.
So earlier on you mentioned the surprise acreage shift in the WASDE report. Does this explain the tumble in corn that we've seen recently?
Absolutely. So the shift from soybean into corn means that the WASDE report was the surprise on the acreage for corn as well. So we've got now an acreage figure of 97.3 million acres. That's compared to 95.2 previously. So it's a much larger area. We did question our US colleagues because obviously we were quite surprised with that shift in acreage. And they mentioned that it is justifiable mostly in North and South Dakota and parts of Kansas, where farmers tend to be mostly corn farmers and they're not going to plant anything else. It's just the timing that was a bit surprising. People were expecting an update at the end of September. It came in August, so that was the surprise. Now, in terms of other data for corn, the yield was also amended to 188.8 bushel per acre. That, in a way, wasn't too much of a surprise because we had our customer survey showing 188.1, so we were not that far off. So the market was expecting a higher yield, but we weren't expecting a shift in that area. Also, the crop conditions in the US for corn have remained very satisfactory. They're currently 71% good to excellent. They're still 10% beyond the 5-year average. And as I mentioned for soybean, it is also valid for corn. We've got the crop tour from ProFarmer this week. So far, it is showing some very large yields in the areas that have been surveyed so far. And for example, we had a crop tour record in Indiana.
And what about recent dryness concerns for the EU and Ukraine?
So for the EU, it's still an issue and it's still being assessed. So we had some rain that was problematic for the wheat harvest in Germany and Poland. That was beneficial for some of the maize. But generally speaking, when we look at France, the crop conditions for maize in France are 65% good to excellent. When we look at the start of June, they were 85%. So we've lost 20% good to excellent rating. And it's a good assessment through that piece of information of how it may look overall in Europe. We also had an estimate that came in very low at 55.9 million tons from Expana. It is the low of the range that we've seen. So basically the market range of estimates was around the 58-62 million tons when we started the season. With the dryness, it's more about that 56 to maybe 60. So we've lost some of that potential output. What is interesting though in maize is the fact that the consumers are not yet panicking. The EU imports so far are 1.36 million tons. That's way below the 3.3 million tons we had at this time last year. And it shows that consumers are not yet panicking about the lower maize production because they feel that there is an alternative in terms of feed wheat that may come out of Germany or Poland where the rain did impact the harvest. Now, conversely, in Ukraine, we've had talk of a larger area than initially anticipated, and we've seen higher estimates from, for example, APK Inform or ASAP, and those estimates go all the way up to 31 million tons.
And any update on South America for corn?
So we had some updates for Argentina and Brazil in particular. So for Argentina, we've got the Buenos Aires Grain Exchange, which is expecting the 25-26 area to grow by 15 to 20%. That will be on the back of a switch again from soybean into corn. So that would be potentially bearish corn again. And then for Brazil, we've had some data from CONAB on the all crop, so the 24-25 crop, where their estimate is now 137 million tons. It's again a very large figure, and it's up from 132 estimated previously. The second corn crop in Brazil is still in the process of being harvested, and whether you follow Patria Agronegocios or AgruRoll, it's anywhere between 84 to 94% harvested, so that harvest is coming to an end. Also, AgruRoll mentioned that the new crop, the 25-26 first corn crop, is starting to be planted and is currently very much at its infancy stage. It's 1.5% planted so far.
Did wheat suffer spillover pressure from corn?
Absolutely. So with the corn market going so much lower on the higher US area estimate from the Westie, on that day that spilled over into wheat, because wheat and corn are related in terms of feed rations. And on the Westie report, on that day, wheat in Chicago made a contract low in every single expiry. It also spilled over into Paris wheat. So Paris wheat has in December made new contract lows over the past week, and yesterday we made a new contract low of 193.25. This is really bad news for farmers. It is again causing some farmer selling retention, but the producer side is absolutely in disarray, considering those prices in Paris, for example. On the back of it, the specs remain very short. So the US specs are about 100,000 lots short in Chicago wheat, and in Paris wheat we still have a massive 250,000 lots short, which will be updated later today by the Euronext exchange around 4 o'clock UK time. In terms of other elements that came in as bearish, we had some updates on the production in Russia, and we had 3 estimates over the past week that are bigger than what we had before. So Sovecon came in at 85.2 million tons, we had ICAR at 85.5, and we had TAS at 87 million tons. Now, the exports are slightly picking up out of Russia. For August, they are estimated at 3.8 billion tons compared to 2 in July. It's still lower than the 5.7 we had last year in August. So it still shows that there is some farmer retention on the sell side from Russia. But in a way, some of those figures have been put into doubt by some of our participants, because we've heard conflicting noises about Russia. We've heard that the central part of Russia harvest had been affected by rain, so there may be some quality issues there. And also we heard that it's still very dry in the southern part of Russia. On top of all this, we've got the Ukraine-Russia peace process or peace talk. We had Trump and Putin meeting. The next meeting could involve Zelensky. It should not have much impact because the logistics haven't changed that much over the past 3 years, but it is a negative headline that the specs have reacted to. And also we had some update from the Buenos Aires Grain Exchange for the crop in Argentina. The wheat crop is almost completely planted, and it's a large area. It's 6.7 million hectares. And at the same time, in North America, the US harvest in winter wheat is 94% completed, and the spring wheat area is 36% harvested. So it's been a lot of elements coming to wheat on the bear side.
Do you have any additional elements of interest to share for wheat? Any updates on Ukraine, the EU, or the demand side, for example?
So Ukraine, we've had some noise of quality issues there and there. The harvest is still ongoing. 19 million tons have been harvested so far for a crop which is estimated in 19.7 to 21 million ton range. So it's almost getting to the end of it. In terms of exports, the exports are slow. Some 1.7 million tons exported so far compared to over 3 million tons at the same time last year. So in a way, it's not surprising, because it means that if they've got some quality issues, they can't export that easily. Also, as everywhere else, farmers have been disappointed by prices, and there's farmer selling retention. Now, for the EU, we've seen the Agricultural Ministry in France increasing its estimate for French wheat to 33.1 million tons. That's compared to 32.5 previously. And in terms of estimates of quality, We've seen Agrimaire putting out some figures. The portion of the crop that goes beyond 11% protein or 11% protein is around 73%. That's below last year, 83%. In terms of specific weight, it's much better than last year. So the proportion of the crop that's over 76 kilograms per hectoliter is some 83% compared to, actually 95% compared to 83% the previous year. And then when we look at the Hackberg, all of them, 100% of the crop is beyond the 220 falling Hackberg number. So that means that there is quality in France and it worked pretty well. We also had an update from Germany. So the German cooperatives are telling us that the crop is about 20-21% bigger than last year. It's more or less in a range of 21.7 to 22.4 million tons. So it's not a record crop like the 24-25 we have seen in the past, but it is a better crop than initially anticipated. And also, we've had some update on the proportion of that German crop which was affected by rain at harvest time, which may be of just feed quality. And our German participants are saying it may be some 30%. In terms of demand, we have seen some interesting demand from Egypt. So Egypt came this week to buy some 200 to 420,000 tons of French wheat. So that shows that North Africa is interested in that good quality wheat at a time when the Black Sea is uncertain about its own quality and export potential, especially as farmers are not selling. And despite the fact that Egypt came in to buy so much French wheat, we didn't manage to hold. And that's why I was telling you that December was making a new low of 193.25. So that's a complete disappointment at a time when there is actual export demand. We also saw some demand from Algeria. There's noise of Algeria looking for German wheat. So it would be for all crop wheat, because we know that the new crop wheat was affected by rain damage. So 30%, as I mentioned, is feed quality. But the Germans are reassuring. They're saying that they've got some good supplies of all crops still available with quality. And finally, Syria is tendering today. They're tendering for 200,000 tons. That, again, is not too much of a surprise. They've had a catastrophic season this year. They've had a 36-year drought record, and we expect that their import requirements will be some 2.55 million tons. So to look at them tendering today is not a surprise.
Finally, what about the Euronext fund roll?
So that's been the element that proved almost every commercial participant right. So the commercial activity has been looking at the fund roll, saying that it should rally Paris. It did not rally the actual CEP or DEC because of the spillover pressure from corn into wheat in Chicago that spilled over into Euronext. But the commercial activity or the commercial sector was correct in terms of CEP DEC. So CEP DEC over the past 2 weeks, when the fund roll took place, rallied from minus 725 to plus 2. As I walked in, it was plus 0.75, plus 1. And that movement shows that the fund roll has taken place. The open interest in September has gone down from some 280,000 lots to some 65,000 lots. So it shows that the position is being moved away. And the interesting bit is that it has piled in into December with a massive 360,000 lots of open interest in December. So over the past few days, it has put the DEC march in focus. Before the fund roll, people were saying that the CEP DEC was expecting to rally. It would potentially rally the entire spread board, and the DEC march, if it rallied, people would potentially look at selling it once the roll was over, because they would expect it to fall again. Now, the view has completely changed here, because the DEC march hasn't rallied as much as we expected. It's rallied from minus 750 to minus 6. It hasn't gone any above. And with a 360,000 lot open interest in December, that DEC march is going to be in focus in November, from the 1st of November to the 17th of November, when the option expiry is for the December contract. And that next fund roll is going to put that DEC march in focus, and people are already speculating that we're going to see a similar, if not bigger, move that we saw on CEP DEC onto DEC march. So that DEC march, which is currently around minus 6, people are saying it could go up to plus 5, but we have obviously plenty of time all the way to November to see other fundamental news and so on. But it's been an interesting area here, because we've got a CEP DEC that has done what we expected, but overall, the market suffered from the Chicago pressure, and also the last bit to mention, running euro dollar once again. 2 weeks ago, euro dollar was 115 on December. We almost went back up to 118.
Excellent. Well, as always, thank you very much for your insights today. For more videos like this, please do like and subscribe.